How much do you earn per month? Are you happy with your income, or is it just enough to pay your bills? Individuals living on a low income struggle to save because they either do not have enough money after expenses or do not have a saving habit. Regardless of how they manage their finances, nobody can argue against the value of saving. No matter how much money they make, anyone can save with some self-control and careful preparation. Today, we'll be sharing some money-saving advice with you guys that you may use even if you have a low income. Number 1. Recognize the distinction between your needs and wants. Spending money certainly makes people feel good, but if you're trying to save money and have a low income, you must be able to distinguish between needs and wants. When your income is low, you must especially be careful and limit your spending to your essential costs. What should be the dividing line between wants and needs then? A need is anything that is necessary for your survival. These include food, clothing, shelter, and transportation, taking the bus, for example. Ultimately, everything that doesn't fit into your needs category is a want item. Anything that is in addition to something you already own falls under this category. Obviously, you can't keep your spending to an absolute minimum permanently. So if you do want to spend a little extra on one thing, you can set a financial target you want to meet and then buy the item you've been eyeing. This approach is effective for 2 reasons. First, it encourages you to set financial objectives. And second, it provides you time to consider how much you really want the item. Usually, when we make impulsive purchases, we regret them afterwards. Therefore, you must be able to distinguish between your wants and needs if you want to make sure you save money while living on a low income. Number 2, don't overspend on your groceries. According to studies, a family spends up to $1,000 per month on groceries, making it one of the higher monthly expenses. Meal planning is the first step in reducing your monthly grocery expense. This will ensure that you only purchase what you actually need and will be a step in the right direction for your health as well. Whether you're aware of it or not, we actually waste a tremendous amount of food. If this were to stop, we could make significant financial savings in the grocery store. Proper planning can enable you to purchase food that are currently on sale, in addition to preventing waste, indicating that your weekly grocery budget might possibly be lower, resulting in more money in your wallet at the end of the month. Eating less meat is the next step in cutting your grocery expenses. Meat is unquestionably the most costly food item you can purchase, so cutting back on it is key. Now, we're not advocating becoming a vegetarian in an attempt to save money, but you may significantly reduce your grocery spending by consuming less meat or by substituting it with less expensive alternatives. The last piece of advice is to only carry cash with you when you go grocery shopping. People often arrive at the grocery store hungry and eager to load up their carts, which is made possible by the seemingly limitless possibility to make purchases using credit. Therefore, make a list of the things you need to buy and just carry enough money for those things, so you don't let hunger rule your decisions. Number 3, reduce your home costs. Whether you have your own home or rent, housing will be your biggest monthly expense. According to many financial gurus, your monthly after-tax income should not be more than 35% of the sum of your rent or mortgage payment and other bills. Even though this expense consumes a substantial portion of your monthly income, it also presents the most room for cost savings, thereby enabling you to save more even if your income is lower. There are many strategies for renters to lower their home costs, the first of which is to look for a more affordable area to live. Rather than continuing to rent a 2-bedroom apartment, maybe a single room in somebody's home will be sufficient for your needs. However, if you don't want to move, it might be advisable to search for other options in reducing your existing rent. Bartering for your services, such as performing renovations in exchange for a rent decrease, or accepting to sign a longer lease, are also viable options. And the advice is slightly different if you're a homeowner. The greatest option to balance your housing costs is to rent out a room. By renting out a room in your house, you can easily earn a few $100s extra per month to help pay your bills and have more money left over at the end of the month. Number 4, budgeting through a zero-sum approach. You deliberately spend every dollar you earn when you use zero-sum budgeting, but not in the manner it appears. Zero-sum budgeting includes dividing your income equally among all of your line items for expenses and allocating any extra money to a savings or investment account. Rent, auto payments, fuel, groceries, and entertainment are examples of common expenses. However, by employing this strategy, you would also add a line item for savings. The tactic works especially well for people who frequently realize they have little money left over for savings by the end of each month. Meanwhile, the zero-sum budgeting approach ensures that your bank account will increase as long as you adhere to your starting budget. Number 5, cut back on entertainment expenses. Sure, we all want to have a good time, but for most people, it comes at a high price. Even though eating out, drinking after work, seeing a movie, and other forms of entertainment can put a serious dent in your finances, they don't have to. To put it simply, we all need some fun in our lives, but we don't have to spend a fortune doing it. Number 6, learn how to automate savings. Automating your savings helps ensure that you can save money even on a modest salary. You may transfer a portion of your paycheck directly into a savings account thanks to these deductions. You will be able to determine just how much you wish to save because of this. In essence, you may tie the two money-saving strategies together by using automated deductions to set your deduction to the amount you've specified as monthly savings in your zero-sum budget. Plus, it will free you from the worry of having to save, allowing you to concentrate on more important things like honing your abilities to increase your income. Once you have a good saving strategy in place, you will be capable of taking on more freelancing work, making the extra money and eventually increasing your savings. Making more money is the most effective way to save even more. Number 7, avoid the debt trap. You must avoid it as much as possible if you wish to save money while earning less. This is due to the two ways that debt prevents you from saving. First of all, having it requires regular monthly repayments. Creditors will come knocking on your door. If you can't escape that debt, you'll have extra money in your pocket at the end of the month. Second, debt typically involves ongoing monthly interest payments on credit lines. These rates are normally between 3 and 5%, which isn't much money. But when you tally up the sum of all of your repayments and the related interest fees, compounded monthly, it might start to pile up. You can see how taking on debt could make saving on a low income difficult. If you want to increase your savings and live a financially independent life, take a moment to assess your financial status and goals. And then try implementing the money-saving advice we've shared with you one at a time. It could appear challenging at first, but with a few adjustments to your way of life and perspective, you'll be on the right track to a financially rewarding life. That's a wrap for this episode, which we hope you enjoyed and learned something from. If you liked this video, don't forget to give it a thumbs up and subscribe to the Inlet Financial Coaching channel if you haven't already. Thanks for watching, and we'll see you in the next video.